Okay, welcome, ladies and gentlemen. We've got a very interesting one today around the housing market, which has just flipped. And very bizarrely, it hasn't just flipped in the US, it's also flipped in the UK and Canada at exactly the same time period. Now, looking at the charts, this is very, very unusual indeed. And when I use the word flip, I'm not talking about a crash, which is usually predominantly 40% or more of a downward spiral, a crash. That's what a crash is in technical terms. But what I am talking about is a weakening that we've seen. And we're going to go through, there's a lot to go through today. I mean, there's a dozen just on the US, different articles and things here today. But we're going to go through it fairly as quick as possible in the most efficient time possible as well. So you've got, and let me summarize a few points before we go into the depth of this. So what have we got? Thousands of US homeowners right now are suddenly underwater. What does that mean? It means that the price they paid for the house is now out of sync with the value. So they haven't lost money on it. Okay, a lot of people say they've lost money. They haven't. You only lose when you sell, but the price they paid for it, so whatever that was, X amount, the price now is a lower value. So that's the first one. Another indicator, we've got a lot of these LEIs, leading economic indicators, but another one is that contractors have gone from being completely overwhelmed to a number of them, and again, it will depend state by state, city by city. A number of them have gone from overwhelmed to sort of underemployed, I guess is the best term. Please drop in the comments if you are a contractor or you're a realtor, if you've noticed this change in the markets, because the data is very interesting. And again, it's regional data at this point. It isn't a nationwide housing collapse in the US. I don't think we are anywhere near that at this point, although I know there's a lot of YouTubers doing videos saying housing collapse, this massive crash is here. I think that's a little alarmist. I don't think we're there. If I think we're going to get to that point and the data shows it, I'll let you know. Believe me, my headline, housing collapse, the end of the world type thing. But we're not there, ladies and gents. The UK has just seen the sharpest drop in home prices since 2023. Sellers are holding out for prices that no longer exist, and buyers have become far more cautious. The market has pretty much flipped overnight for the UK. So we got US, we got the UK, Canada as well. Home prices are already down. Are you ready for this? 3% just this year. This isn't 12 months or 24 months. This is just this year from the start of the year, and they're expected to fall further due to this trade war with the US. A lot of this is around consumer confidence. It's really been rattled at the moment. And what else we see in Toronto, Vancouver, prices are falling while affordability remains very deeply strained. So what's going on then? And what does this actually mean for everybody with this global, cycle, this real estate cycle that we're seeing? So let's get started on the first one. This one says housing market warning has been issued. No one is buying the new homes. So let's get into a bit of this. Again, I've highlighted all the key points on all these articles, just so we don't need to spend 2 hours here reading through it, or we'll just go through the really important stuff that you need to know. Okay, so this is a real estate analyst, owns a big real estate company. He said no one is buying new homes that are under construction or permitted. Months of supply for both is sitting between 15 to 20 months, which is the highest on record. He said that never in the history of the US have we seen this much supply. He said, the mean is something like 19.5 months at the moment, and he's forecasting a massive crash. I mean, he uses the word collapse, actually. But I don't think we're there, and I can't see that in the data, but we are seeing people now saying that we're going to have this massive collapse in US housing. Let me tell you what I think as we go through. So month of supply at the minute, months of supply refers to the number of months it would take to go through all listings available on the market at the current pace of sales. That means that buyers would go through the current levels of new home inventory in the US market in 15 to 20 months. This is much longer than what is considered necessary for a balanced market of around 6 months. So this is the first point that we're seeing. Normally a balanced market, and that means balance means it's equal between buyers and sellers. So you've got the same amount of buyers, you've got the same amount of sellers, you have a balanced market. But when you have 15 to 20 months worth, that is a buyer's market, which is the flip side of what we saw during the lockdown period, which was a heavy seller's market. You remember there were bidding wars, the prices were just going crazy because of all the liquidity was being pumped into the housing market. It was just an insane period. So what we're now seeing is a buyer's market. And traditionally what this does is it pulls prices downwards. And a quick note as well, for all of you in the US, it is July 4th coming up this Friday. One of my favorite days when I used to live in the US, 4th of July, and one of my favorite holidays. I'm running a massive sale on all courses this July 4th. But you can look at it all today. You can go on the sales page, the information page, and basically any course I've ever created, even if they never come on sale apart from Black Friday, you can get up to 90% on that course. So have a look below in the description. Just have a look if any of those courses are of interest to you. There are some real estate courses. There are some property investing courses on there as well. But yeah, there's just tons and tons of courses for you there. So check that out. 90% off. So what else then? Builders have already taken notice of the growing sluggishness in the new homes market, and they're actually losing the motivation to start new projects. So the data is showing that residential construction fell to its lowest pace since 2020. And we're supposed to be in this massive boom period. I think a lot of these tariffs have been enacted so swiftly that they've caused this shock. Again, I'm not against the tariffs. I think economically they're a sound long-term policy for the US, but they've created such heavy shocks and also increased costs on a lot of consumers and builders and everyone else. I think it's kind of created this shock treatment, and they've got to be very, very careful at the moment. The US has to be very careful that it doesn't drive the US into recession. You basically, it's a very fine balance at the moment that they've got to get right. That's why President Trump is so heavily getting onto Jerome Powell to drop rates, because he knows if the rates are dropped quite heavily, then it's going to keep the US out of recession. And even if it goes into recession, I don't see it as a deep recession. I see it as a temporary recession while they balance out all the tariff impacts, as it were. So just something to watch. Rising inventory and tumbling sales is the next one. So if you remember what happened after the sort of subprime mortgage collapse that took place, that's sort of 2007, 2008, you had a large amount of underbuilding. The home builders just were like, we're not building right now. And what did that do? It created a lack of supply. And it still continues to this day. So you've still got, you've still got finally this sort of turnaround with supply. But even now you're seeing the permits are dropping. So have a look at the builders' permits. They are dropping at the moment as well. What else? Some of this I don't think is overly relevant. Sales of new homes are falling as buyers continue struggling with sky-high prices and elevated mortgage rates. That's what it is. It's affordability. And I don't know if you've ever watched my most popular video that I ever made. You can go on the channel, click videos, and then click most popular. It's got almost 2 million views on that. But that breaks down the full housing market cycle. I can probably add it to the cards at the end of this or something, so you can watch through and then click that after. But it sort of breaks down everything. And I said, it doesn't really matter that we should be having this massive collapse in prices right now, because there's one metric that hasn't been hit, and it's supply. As long as this is a seller's market, It doesn't make any difference if all the other metrics are off and people aren't working and people are being laid off and everything else. It doesn't matter because of the fact that there's still, a lack of inventory. It's a seller's market. So in May, new home sales dropped by, are you ready for this stat? 13.7%. That's not a typo. In May, new home sales dropped by 13.7% compared to a month earlier. It was the biggest monthly drop since June of 2022, and this decline actually took most analysts by surprise. No one expected this drop at all. Now, you compare that to a year earlier, new home sales were only down by 6.3%. So we're definitely seeing something going on, ladies and gents, for sure. Right now, there are 268,000 homes for sale that are still under construction. That is 2007-2008 levels of supply. Builders are losing motivation, they're wary of the slowdown in demand across the country, and they are really concerned about the rise in construction material prices. Again, it's about 80% of them that were surveyed said this is due to the tariffs. So that is an impact that it's having. Again, they're going to be very, very careful with this at the moment. According to the most recent survey, this is from the National Association of Home Builders, they said that sentiment is now the lowest level in since 2022, that period we just talked about. And they have been lowering prices in June. That's 37% have been lowering prices. That is staggering. Housing starts dropped by 9.8% as well. So this is not looking positive. We're already seeing a pullback on construction at the moment. So that's the first one. In 2010, 50% of all homes sold were purchased by first-time buyers. So you go right back to that sort of period. Today, that share is half of that. It's only 24%. So we're seeing a drop in first-time buyers. Why? That's the question people usually have on their mind. Why? It's affordability. If you look at the interest rates and the mortgage interest rates at the moment, it is unaffordable for a lot of first-time buyers, plus deposits and everything else. But we had the US Housing Outlook that came out, and they said that 44% of consumers believe this is a bad time to buy a house because of high mortgage rates and tight credit. By the way, a quick one. If you need to increase your credit, you can actually, the course is so cheap. It is ridiculously cheap on that link that I mentioned below. It's, I can't remember what I'm doing it for, but it's incredibly cheap. If you have debt or you have a debt problem or you have any issues with your credit score, I guarantee you take that program, it will boost your credit score absolutely massively, meaning you can get a better interest rate, mortgage interest rate. So that will save you an absolute fortune. It's under $100 anyway for the entire program. You've got 2 programs there. So check that out. But the other thing is 34% of Americans have said if they were to move, they would rent at the moment. They're not looking to purchase. That has increased as well. The US housing market, this is out of Redfin, has nearly 500,000 more sellers than buyers. This is the most ever in history. Okay, there's never been a time that it's been this high. They say that, again, this is from Redfin here. They said that house prices will fall as a result. Can we just throw that chart on screen a moment there? So we've got here, there are nearly 500,000 more sellers than buyers. So you can see this blue line here. That shows you the buyers. And it's 1.4 million or 1,453,000, and we've got sellers at 1.94 million at the moment. So what we're seeing is this massive crossover. If we go back to, and if you can zoom in a little bit over the 2021 area there, you see the red line. That was the sellers. We saw a massive inversion of the graph here because the sellers dropped down massively, whereas the buyers went up massively. So what was it? It was just a crazy market, what was actually taking place. No one wanted to sell. That was the thing. People just didn't want to sell out of their property. So we had a lot of buyers chasing lower inventory. And then as we go into late 2022, we're not quite 2023 here, it sort of crosses over. nothing really changed because there was still a lot of liquidity around. It was still affordable for people to actually move into, getting a mortgage. First-time buyers could still afford it, etc. Wages started to increase. But what we've seen, and it was sort of, we're just coming into 2024 here, but this is where we started to see this crossover. We saw it level again. I'd say that was about 2024. It actually leveled off, so it was an equal market. But now we've just seen this run up here of people wanting to sell. And I've got a lot of theories behind that. We can come off the charts now. I've got a lot of theories for that. But one of the theories, I think, is that where you had this shock before, where people said, look, I'm not moving. It doesn't matter what happens. I am not moving because I've got this really low interest rate and it's locked in. I just don't want to move because I don't want to touch that interest rate. Now what you've actually seen is people have said, yeah, I know that I'm going to be paying a couple percentage points more, but that job doesn't exist for me anymore. I need to move. I need to relocate. I need to move the family. We just don't want to live in this area. So the sort of shock has already gone through the economy and people aren't as focused as they were. So you're seeing more people actually selling and getting this higher mortgage rate. So I think that's one thing that's happened. Also, it's very expensive to buy a home. There's economic uncertainty. A lot of people are uncertain. You look at there was another sort of chart around this, and it was talking about consumer confidence. I think it was the University of Michigan Consumer Confidence Index. And people are just not confident at the minute. They're not. They're worried about their jobs. And this is, you think about AI taking the jobs and all the graduate jobs that are being just destroyed at the moment. They are down heavily, very, very heavily. So you've seen all these things. What else are we seeing? Yeah, there's so much going on. We've got another chart as well. Actually, yeah, let's pull up the other chart. This is home prices tend to shift after seller balance shifts as well. So we've got year-over-year change in ratio of buyer to sellers on blue, and then the red line here is the year-over-year change in median sales price. So you can see what's happening here very, very clearly as we're in 2025 region. There's a massive movement here. What's that, 2 to 3% range versus the 9% range we had before. So we're seeing massive changes here in the market. The data doesn't lie. Let's move on to top 10 buyers market, and this was April 2025. So I mentioned that some of these mortgages are underwater now. A lot of sellers are underwater. Let's just grab that chart on the US metro area here. You can see Miami, Florida in this table. The seller versus the buyer's difference is 197%. You got 21,500 sellers versus 7,000 buyers. So what's quite interesting is we've seen increases in prices, which is what you would expect because the buyers have only just started to, or should I say the sellers have only just started to massively outweigh. But you look where Austin, Texas, at the bottom of this chart, 124%. You've seen a 3% drop. Why? Because the home building there was the gold mine. You know, Florida, Austin, Texas, some of these other areas. Austin, the tech boom is moving their tech jobs. It's obvious what happens. You have entrepreneurs, home builders that move into an area where there's just massive price changes, there's an undersupply, and they build like crazy. That's what you've been seeing over the last few years, and now we're seeing it catch up. So we're seeing a drop now. Austin, Texas. I see this going right the way through Fort Lauderdale, West Palm Beach, and Miami, Florida. But we'll have to monitor the charts. If it continues at this pace, that is what we're likely to see. Also, another big one is 6% of pending home contracts. This was ready to buy a home, were cancelled in May. This was up 5% from May last year. And it's the third consecutive month with these sales cancellations going through. Please let me know if this is the same in your area if you are a realtor. They also found, this was from Redfin data here, 14.6% of all pending sales in May fell out of contract. 14.6%. fell out of contract. This was the highest cancellation percentage going back over a decade. So again, we're seeing all of these patterns starting to emerge here. So we've got three things that I think we should watch carefully. These are falling home prices, check, that's happening. Waning investment, check, that's happening. And a sluggish job market. These are three things that we are, that I'm going to be paying very close attention to as we move forward. Definitely. The impact on the labour market, I think I'm going to bring out a couple of points they've made here, but I want to build upon this. So they're saying that they're concerned about the construction workers because there's 8 million construction workers in the industry. I'm not convinced by that, because what you've seen is a lot of the construction workers that were not legally working in the US have gone, right? So you've actually got more work now for construction workers. We're seeing that in the data as well. So that's one thing, but also it's not the construction workers that I would be concerned about. I would be, as in them pulling down the greater economy, I would be more concerned about the average person losing their job to automation and AI that then falls into an employment scarring cycle that hasn't got money to spend and go to the shops, go to the grocery store, go out and buy a new car. That's what I would be concerned about. Not the 8 million here. You're talking about the hundreds of millions of workers out there. I think that, and they say they're concerned this is going to cause a big recession, these 8 million workers. That isn't my concern about them. I want to move over now to the UK market. And we have one headline here. This was the main headline of the day. Deluge of desperate sellers send house prices into a tailspin. A perfect storm of landlords and second home owners selling up triggers the fastest collapse in 2 years. It's not a collapse because that's 40% or lower, but we're definitely seeing a big fall. They're saying that they're flooding the property market at biblical levels, indeed, really, causing prices to absolutely plummet. Home prices fell by their fastest rate in 2 years, down almost 1% in a single month. That is quite a big drop, especially because we're in May at the moment. This was the data for May, should I say, because it's always behind. We've just gone into July at the moment. So May is spring. So we're moving heavily at the moment into the summer. So this shouldn't happen. This is the peak season for the housing market. And again, what did the analysts predict? They all predicted an increase for May and June, not this decrease. And it's quite funny. I want to bring up some of the stuff that their comments, because they always, when they get these forecasts wrong, they always blame something. So they've blamed President Trump. They've said his tariffs caused, our forecast to go wrong. That's why our forecasts are wrong. It's President Trump's tariffs. His tariffs had absolutely nothing to do with the UK housing market. There's other things we'll look at. Number one was this stamp duty raid by Rachel Reeves, the Chancellor. That was the first thing. People just created a big flood of supply to try and sell their house early. And this did make a big shock. There was also the second home premium that came into effect on April 1st, doubling the council tax for thousands of families across England. That was another thing that took place. Experts warned that the life is being sucked out of the housing market, and the post-stamp duty lull in demand has collided with a deluge of supply. So there's a lot of forecasts here. Things are not looking good. Councils, this is another one. So when they announced, Rachel Reeves said, we're going to put this second home tax, on all these people that have got second homes around the country. Well, do you know what? They were supposed to raise about £500 million in taxes. Actually, they've now lost £334 million. Because, and again, there was this loophole. It was obvious that people were going to take advantage of this loophole. Many of you watching may have taken advantage of this loophole as well. It was obvious this was going to happen. Because what is the loophole? If you have a second home, and you rent it on, some of these Airbnb type platforms, you can actually avoid paying council tax and you can pay business rates instead. So there's different layers to this, but that is what you can do. So that's what they've done. They've been flipping them onto now, making them rental. They're not, what am I trying to say here? They're holiday cottages, they're holiday rentals. That is what they've moved them to now. And as a result, they have lost an absolute fortune. 10,731 holiday let properties in Cornwall alone. In one county alone, 10,700 have gone on to these holiday lets now. 1 in 5 homes has now sat on the market for 6 months or more. Supply is really picking up in the UK as well. And a lot of these analysts are very concerned. 22% of properties just haven't sold. They've been stuck on the market now. They haven't sold. House prices see the biggest fall for over 2 years. We've got even more data on this. Now, this is quite a key paragraph here. The changes to the stamp duty came into effect in April, and that was for £125,000, and it went up to it went down. It went down from £250,000 to £125,000. So, people are going to get hammered with this, and no wonder so many people jumped in. So you've priced a lot of people out as well. They don't want to pay this extra tax. First-time buyers also have to pay stamp duty on homes costing more than £300,000, whereas before it was over £425,000. Here's what some of these experts had to say and why they got it wrong. Here's the first one. I mean, they're all positive, of course. The housing market has been softened, but we think this is all temporary, and we see a massive rise in mortgage approvals going forward. Another guy here, we got Rosie here. She said the housing market is still digesting this. Very positive. Everything's going to bounce back this month. Another one here, this immediate impact will fade into the rear view mirror. First-time buyers and movers are already beginning to adjust, and they're already going out to the market to buy. No, they're not. Here's one. Some people have chosen to delay moves owing to concerns over their jobs and wages. Thank you. At least we've got one that is honest here. All of this is positive, though. You know what this reminds me of? 2007. Do you remember 2006, 2007? All these sort of cracks were emerging, and all the analysts kept saying, no, housing market is strong, it's resilient. Yeah, I know that it dropped a few percent, but, it was just a blip. It doesn't mean anything. And then the next month, drops again. No, this is just, it's going to go up next month. They just kept saying it. But you think about the challenge for a lot of first-time buyers. They've got to try and raise this deposit against these house prices that have exploded. And what does that mean? If they're living at home with their parents, yeah, they can save up, but house prices have been going up. But if they're not, they're renting. So how do you build up a massive deposit if you're paying sky-high amounts of rent? So there's all sorts of nonsense. There was another one here. And this chap, I've got to tell you who wrote this, because he's talking absolute nonsense. Okay, he's Nationwide's chief economist, Robert Gardner. Listen to what he said. He thinks this is all very positive. The unemployment rate has remained low. No, it hasn't. The unemployment rate is high. The government has manipulated the statistic. It's very high unemployment rate because they include all this gig work and, if you do a delivery here, you deliver a pizza on a Friday night, you're employed and all this sort of stuff. He said earnings were rising at a fast rate in terms of real terms after accounting for inflation. No, they haven't. They are about the same level as 2009. If you actually adjust it for inflation, it's the same as 2009. Household balance sheets were strong. No, they are not strong. They are very weak. Debt levels are at sky-high records. Borrowing costs are low. They're not. Borrowing costs are very high. This is the chief economist here for Nationwide. How? I don't know. Don't ask me how that's possible. So what have we got? The average 2-year fix is at 5.09%. The average 5-year fix is an average of 5.08%. Tony Bill, the head of UK residential at Frank Knight, said at night. Frank said, the good news is that rate cut expectations are growing due to the weaker UK economic outlook. That's kind of an oxymoron, don't you think? He's saying this is great news that a rate cut is coming because of weak economic outlook. That's not going to do anything. Actually, all that does is puts the fiscal and monetary policy of the Bank of England and the UK government in an even worse position, because they won't have any tools then, if we go into this deep recession, to actually pull us out of it. They'll just go into a debt spiral. That's why people are getting out, because they know what is coming. This is worrying, ladies and gents. I am worried about the UK housing market. I am. This is not looking positive. But what is interesting is, about 5 years ago, I talked about the areas that I thought would do really well. And I said the North East, Northern Ireland, Wales, etc., because these have been areas that have never really seen massive amounts of growth. And I talked about London. I think it's overly saturated, especially with, a lot of stuff going on in London. It's not quite the same city it used to be. I'm sure many of you watching live there. And the Southeast and some of the other places, I just feel that we've seen a lot of that growth and we'd see more stagnation. That's exactly what the data has just come out to say, exactly that. The growth areas are exactly the ones I just mentioned, actually. So that's something to pay attention to. Now, I just wanted to mention Canada briefly as well. So prices have fallen 3% already this year, and they're expecting now, they've just forecast another 2% drop as the trade war has sort of hit home buyer confidence. So they believe it's going to decline 2% this year, and they think it's going to stagnate right through 2026, and that's the positive outlook. A significant downgrade from expectations of rises. This was 3 months ago, they all said rises. So this is a Reuters poll of property experts who showed significant concern over what's happening between the US and Canada. A lot of it is the fear of job losses. Again, it's the same pattern throughout. Has actually dragged down buyers' confidence. We have the Bank of Canada has dropped the interest rate 225 basis points at 2.25% in English. And this is really what I think has stopped a bigger slump. They've dropped the rates. Now, what are they going to do? They can't drop the rates anymore, so all they can do is quantitative easing, turn on the money printer, as it were. So this could be a concern to look out for Canada. But if they do that, that pushes all of that currency creation into asset prices. So tangible hard assets is where you could see a gain if you see them resort to QE. Uncertainty around US policies has definitely paralyzed the housing market, and it's done more than that. It's affected business confidence, capital spending, hiring, and people are just concerned about their jobs overall. So they're holding back on buying a house. Home prices in Toronto are expected to fall by 4% and 2% in Vancouver. Can't get my words out today. And that's how you know it's been a very long day for me doing all this research. They think home prices are likely to weaken over the next 2 to 3 months, and then hopefully, they say, recover in 2026. But of course, they blame this on President Trump. They say, if it wasn't for President Trump, we would be fine. It's not due to President Trump. There's a lot more going on that is causing all of this. It's weakness right across the board. And all that 2020 did was made a weak economy that we have in the West even weaker. And the tariffs have now started to cause a lot of underlying issues to really come to the surface. So I'll be watching that closely, of course. But check out the July 4th link below. Have a look at that. And apart from that, take care. God bless you guys. Have a great 4th of July. I'll stream on the 4th as well. And I will see you in a couple of days. Take care.